Hello, everyone, and welcome to our panel on the evolution of Proptech. I think it's a very exciting topic because it's not just about building and selling better buildings. It's about the way we might interact, live and work in our built environment going into the future. And so we've got an esteemed panel with us here today to talk through this topic. And we welcome your questions. I'll call out to you when there's an opportunity to take some of your thoughts as well. As audience members, we'd love this to be as interactive as possible. So joining us today, we have at the end here, John Wibrand, who's joining as the HVAC Digital Director from Swegon. He's an expert in building connected physical and digital systems for commercial real estate. And so I'll give John a moment as well to introduce himself shortly. We've got David Adjei, who's the founder and CEO of Aichitect. He's navigated the course from chartered international architect to tech founder, and he'll be able to share a wealth of insights from this journey. And we've also got Eliott Saba, who's the partner at Bootstrap Europe. And this is a venture debt firm that provides ambitious businesses with non-dilutive funding. And over the course of his career, he's underwritten over 300 million euros to many successful and ambitious businesses. So I'm going to introduce this opportunity now for each of you to tell us a little bit about yourselves and why you're passionate about what you do. So we'll start with you, John.
So hi, yes, John is my name. I work at Swegon, a digital director, HVAC. HVAC stands for heating, ventilation, and air conditioning. So the company I'm from, we actually manufacture the things that goes into the building: heat pumps, air conditioners, cooling machines. We're not a startup. We've been there for quite a while, around 5,000 people across Europe, a bit in North America, India. And my role is to make sure we make the most out of the data from our products, because real estate owners want to use this data for different purposes, reporting and stuff. Proptech startups want to use the data to energy efficiency reasons and various other things. Presence is very hot. So typically when I walk in a room, I look at the things. Usually you don't see our products. They're not invisible, but they're hidden away somewhere. But you can see some like diffusers and grills and stuff. Yeah, so that's what I try to do. And I'm passionate about this because there's such a huge potential to save energy in all the buildings. It's not easily done. Well, some of it is, but it's such a huge potential.
Amazing. Good morning, everyone. Thanks for the introduction, Lasya. And I've built what I've built simply because I was tired of apologizing to my clients when projects will not go as we forecasted, when unknown risk or unknown unknowns would creep up during the life cycle of a project, and that will cause major delays and lots of unnecessary costs. So what we are building with Aichitect is a prediction engine to assess, analyze, and mitigate against risk at every stage of construction projects, so that someone like that's in my position as an architect can avoid those risks for their clients, and we can put a dent in the $84 billion in disputes we have globally within the space.
Eliott Saba, I'm one of the partners at Bootstrap Europe, but I come with a dual cap today. I'm also the chairman of Habito, the online digital mortgage brokerage. I've been focusing on the PropTech space for a little bit over a decade now, originally starting at Silicon Valley Bank, now HSBC Innovation Banking, for those of you who haven't read the news for a long time. And I co-built the fintech team there, and my focus was money remittances and PropTech specifically. So moved there to Bootstrap about 5 years ago, and now providing 1 to 15 million euro, pound, dollar tickets to successful startups in the fintech and specifically in the PropTech space.
Thank you each, and I'm your moderator for the day. I'm Lasya. I hail from London Partners, which is London's growth agency. We've helped investors like Fifth Wall set up their London office. We've worked with corporates like CBRE on their innovation practices, and we've supported many, many PropTechs to scale into London and internationally. So let's get into the discussion. The year is 2015. I've just bought a house, and I'm waiting for paperwork from my solicitor, almost like I am waiting for an owl to deliver my Hogwarts letter. So we've come a long way since then, in the decades since. Can you tell me a little bit about the way Proptech has transformed the industry in your point of view? And I'll start off with you, David.
Well, first of all, in regards to changes in Proptech, we have the digitalization of information. Back in those days, a lot of things were either done by hand, and now, the whole conveyancing process is becoming ever more digitized, and we have lots of solutions popping up in that space in terms of automating tasks so that you're not calling your solicitor, 25 times in a day to be able to send one email. So that's one aspect that's changed in regards to Proptech. On my side, in terms of on the delivery side, in terms of my background, so in the 10 years I ran my practice, I was always sort of at the knife edge of technology, and we carved quite a significant slice of the market for ourselves, just training architectural companies on how to deliver things in what we refer to as building information modeling, which is BIM. And that has changed rapidly and now become the norm within the space. So if you met an architect who draws by hand only, it's like it's such a rare, like it's kind of weird. So that's one thing that's significantly changed within this space. And what you see is that more younger and independents are being equipped with these tools to be able to deliver, major schemes. So, for example, in my practice, we were able to work on schemes that are worth billions in value with a very small footprint. Whereas traditionally I would need, a building this size with 100 architects to be able to work on something like Tottenham Football Stadium, which we worked on for the urban design side of things. So that's one thing that significantly changed. And then, in the energy assessment side of things, there's so much work happening within that space in terms of decarbonization of projects and, management of buildings and digital twins and all that type of stuff, which is all coming into this space where, various different service providers are now, taking ownership and responsibility and providing data to managers, information managers to be able to assess these different things. Now, that didn't happen before. Before, your IP would be locked in your firm and we would only get the deliverables at the end. But now there's like a more collaborative and a sharing approach, which is, fundamental for us to sort of push the industry forward.
Okay, so data has unlocked opportunities to kind of share. Do you have thoughts?
Yeah, I think, the Proptech industry is a very wide world. And so I think the reality is if we look at the last 10 years, we've seen innovation throughout the value chain. We've talked about the building side of thing, the conveyancing, but even if you think about like the financing side of thing, right? Like whether it's crowdfunding, fractional ownership, if we think about the actual management of the properties, right? We've seen a huge amount of like automation around how do you manage your tenants, like tenant optimization makes as well. I think, so I think we've seen just a lot of changes across that value chain. And to me, the exciting part and the proxy that we use to try to understand, okay, how innovative is an industry going to be, which is far from a perfect proxy, is how much investment has gone into it. And if you rewind back to 2014, 2015, UK PropTech industry was receiving about like 150 to 170 million pounds a year. Today is receiving like 15 times that, right? Like last year was a little bit over 2.5 billion. So I think there is definitely innovation that's coming and there's capital to fund it behind it.
Thoughts on the decarbonization piece, John?
Well, I think everything is more or less driven by the decarbonization, especially when it comes to all the new requirements and regulations, CSRD, PPD coming from the EU. Everything aims at driving down the carbon footprint of the buildings, more or less. I don't think everyone really understands that that's the driver, but that's really it. And I'm kind of afraid because I see a lot of real estate owners complaining a bit, saying, oh, we can't have all of these regulations, we can't do all of this reporting because that will take time. Yes, it will take time because you don't have, a good data pipeline, because you have to really spend time and, you're the responsible, taking control of the digital infrastructure. But also, one thing that's changing a lot is we see a lot that the digital capabilities of our products are increasingly important. I mean, David, you work with the drawings, and if we don't have the right BIM files, the right drawings for our products, sometimes they are not picked at all. And then also later on, I mean, how can the products exist in the buildings and fit into the ecosystems? Sometimes now in projects, we get chosen just because we have easy and good access to standardized data. That makes me super happy, I mean, because that's what I work with. But it's interesting to see the transformation from just looking at the physical properties to just data.
You've each touched on the topic of change and getting an industry on board with change. And then one of the kind of criticisms that's been levied at the property and construction industry has been that it's very slow to change. I mean, obviously it's a legacy industry. Landlords have been around since 1066 in England with William the Conqueror. But I would love to hear your thoughts on where the industry needs to be pushed a bit further at this point in time. What are the key friction points? Anyone who wants to take that? Let's start with David again. Oh, Eliott, would you like to?
No problem. So obviously in this space, we're dealing with, high risk, high value assets. And if it goes wrong, it goes very wrong. One thing that I believe that the industry doesn't do well is major shifts. We don't do big shifts very well. Like that's when you get the resistance to adoption. That's when you have, for example, with our tool, if I was to proposition it to an architect or to a property developer and say, you're going to have downtime for 3 to 4 weeks to learn how to use this tool, they're not going to want to go through that process. But in the way that we're building our tool is that it's very lightweight and intuitive. So within 5 to 10 minutes, you're getting value back already. Now, that's an easier pill to swallow for people that typically are not operating with very big profit margins, So the staff need to be, doing things that are connected to income quite a lot of the time. And in my position, sort of being an operator, moving into sort of a tech innovation, I understand that without having to ask them. So we're building things that meet them in needs. So for example, we had workshops with some of our customers earlier this week, and not one person said anything about the UI was wrong. They said, this is exactly what we need right now. Simply because I understand it without even asking them. Now, a lot of the innovations that come within the space aren't built by people like myself that have lived and breathed these pain and these problems. So I feel like that understanding and that nuance of that lived pain of me sending that email to the client like, oh, that's going to be a 6-month delay is something that helps me to shape this company and the products that we bring to market. So to answer your question plainly, is just that big changes we don't do well. Incremental changes tied to value, tied to profit, tied to, a saving time and like the with him, what's in it for me, tied to that in a quick way, then that's where you get adoption.
I think you touched on a really important point, which is profit margins of real estate companies. Again, depends on the space, but are typically quite thin. That means that they're inherently going to be more resistant to change because they have less of a buffer for mistakes. And I think that alongside the fact that there's a lack of digital skills within a lot of the companies they're trying to sell into, that means it's harder to implement the products, and they don't have in-house the right people to help integrate it, but also scale it meaningfully. So sometimes you end up having 1 or 2 adopters in the companies, but it's really hard to get to the scale that's going to deliver meaningful value. And then you tag on long sales cycles because they don't really have the tools to understand it, and they don't really have the risk appetite. It's a very hard space to sell into.
I think just some years ago, many real estate owners had a bit too much money. All the interest were low, and they wanted to spend time on innovation. They want to have their own AI. They wanted to have their own things, which was not really good because there were so many different ways of solving the same problem that popping up, which makes it super hard to scale. So I'm kind of happy now that they're not doing that. Of course, they have some downsides as well. And also, I think one thing holding it back is that the market, it's hyper-local. You don't really move the buildings from one place to another. There's different regulations in different countries playing in as well. And also, you don't really think about the smartness of a house when you build it. Take this house. How old is it? No one thought about how you can connect it when it was built. So you make houses and then later on just kind of hope that they are going to be smart. Whereas you take another smart product like a car, I mean, you can't buy a car now without some kind of connectivity. Someone has thought about the data sharing and the capabilities right from start. That doesn't really happen in buildings yet.
Hopefully you don't need monthly subscription with buildings like you do with cars nowadays, but we'll have to see.
Yeah.
And one thing just to add to that is it's just like in my opinion, there's two things that really drive adoption of technology within this space, and it's either regulation or profit. So if we need to demonstrate certain metrics to a regulatory body, even if we don't want to, we're going to have to do it. So we're going to need a tool to do that. The other option is profit. You know, if interest rates are high, profits are slim, I need to find ways to save money, to save cost, to make more money, so that the business can survive and thrive. And I feel like if it's not tied to those two things, it's quite difficult to find people that want to adopt technology for technology's sake. It's very rare in our space that say, oh yeah, we want to try this new thing, just even though there's no real benefit to me. That's a hard sell. So I feel like a lot of innovations need to tie into either regulation or profit.
Okay, and on that note, for the benefit of any investors or funders in the room, how can they help their portfolio companies with that conversation? That conversation that needs to be had with asset owners. What value add do you think investors can bring?
I'll save you a little bit on that one. I'm a little bit of a skeptic, and I apologize. I don't think there's a huge amount of value add that an investor can bring in terms of the actual sale in the industry. To me, there's maybe two or three things. First off, if you have an investor that is focused on Proptech, that has LPs, meaning their own investors that themselves are in the space, then that can be a good channel in terms of industry connections and helping kind of build the top of that of your sales funnel. But beyond that, I think what you said is important. Like, to me, it comes down to having a clear ROI that you can communicate to the client. So if you have a very clear product proposition and you can actually demonstrate quite clearly, here's how long it takes, here's the ROI for you, that's valuable. I think investors can help shape that, beyond those two things, and obviously helping fund the business. It's, I'd love to hear if you think there's more value.
I think it comes down to the founder team. They've really got to understand what they're building and why they're building it. I see a lot of stuff in the space that is fluff, and it's like, if you understood the real ramification of delivering and managing assets and that type of stuff, you would understand that maybe this tool isn't perfect in the way that it's shaped. And I feel like the founder market fit has to be very, very, very key in this space. Otherwise, because I've even heard recently about a few Proptech solutions that have gone under, and it's like, I can see where the mistakes were because I've lived in this space. So I feel like there needs to be really deep research on the mindset in this space and the mindset of the buyers within this space, and what motivates them, what pushes them to buy, and how you need to frame it to them. That's very important.
And how can you validate at the early stages that you're building something that's truly meeting the industry need?
Just get close to your customers. Literally, like, everyone knows somebody that's building the house. Everyone knows somebody that's a property developer. These people, they're dotted around. They may not be very obvious, but you got probably investor events weekly, sometimes daily, across cities. Like, there's no shortage of routes to market. And I think if you get your product and talk about your product in front of many people, you will then see from the reaction that they give you whether it's something that's of value or not.
Making sure that there's an interest in actually buying it as well, not just saying, that looks fine, because that's super easy to get. I think investors can perhaps help with focus. Sometimes the innovators and founders are enthusiastic, want to solve everything, and also sometimes see their product as a potential Swiss Army knife, whereas it's good to really focus on the value, and also making sure that you understand the property owners, where they save or earn more money. And many times they don't really know themselves. I've seen some projects that wanted to have everything connected and then they ran out of money, started alphabetically. They ran out of money when they had connected the soap dispensers. So, and it just doesn't make sense because they don't really have their priorities right. And I think they can help with that as well.
And one thing that I think that investors can actually help with in a major way is if your Proptech solution is in a certain geography, when you want to expand internationally, they may have contacts in those markets that you want to go into. So, for example, if I'm putting a Proptech for the UK, it may not directly apply to the US or other parts of Europe or Asia. So there may be connections that could be made to help make that transition a bit easier. So I think that's a good point to
That's
add value.
a good point. I mean, help to think scalability. How can you take this to other places?
So VC is the main funding source for Proptech still. It's interesting because not a lot of VCs have come from a background in real estate themselves. You can see quite a lot of VCs come from entrepreneurial backgrounds or from investment banking style backgrounds. Don't see as many coming from the real estate industry. Do you feel like current funding models are designed and built to support this particular industry, or do you think there need to be some changes? Because the real estate industry is a very long-term mindset, whereas VC traditionally has been a bit more short-term in its fund cycles.
Yeah, I'm happy to start on that one. I think there's actually a lot of different like funding partners out there, and if you think a little bit about also what you're trying to build, if you're looking to finance an infrastructure project versus if you're looking to finance a software-based management system, you're not going to need the same type of capital. And so to me, it's a piece of work that the founders need to think about. Okay, what am I addressing, and therefore what's the right source of capital? And because out there are VC funds, there are like traditional institutional financial driven VC funds. I say there's strategic funds as well. You've got pretty large family offices. You have infrastructure funds. So I think it's about really understanding the need that you're trying to solve, and then finding investors that are going to be aligned with the vision and the time that it's going to take you to build and scale that business. So I think there are a lot of solutions out there today.
And when should one go non-dilutive?
I think, well, here we have both, more of a hardware and more of a software-based offering. I think where non-dilutive is particularly interesting is on a lot of the Proptech side where you have like a hardware-enabled component, financing your CapEx, financing that working capital with equity is very expensive for a founder in terms of dilution. And I think that's where, we can play a big role, where we can come in with non-dilutive capital to help finance some of that. And then on the software side, depending on where in the value chain you are, there can be quite a bit of seasonality. So it's about helping like smoothen that. And then the last piece is mostly just saving on the dilution early on.
So you touched on it, and I feel like it's just making sure that you're going for the right type of capital, the type of company you want to build. That I think in this space in PropTech, in technology in general, everyone's just thinking VC, but then that only suits a certain type of company, and you need to be mindful of what you're getting yourself into. So we're VC backed. And we raised backs in literally 29 days.
Congrats.
And was bootstrapping initially, and then a VC overheard our conversation in my members club, and 29 days later we closed. But that aligned with my vision for the company, which is fine. Now there may be founders out there who want to build things that it's more long term. I want to run this for 50 years. I want to hand this to my kids. So then VC is probably not the vehicle for you. You may want like a super angel or like a family office to become like a partner that maybe has a background in construction or property. So I think it's asking those tough questions and just understanding the mindsets of the investors that you get into bed with, so that you don't have friction down the line and then they're telling you to do something and you don't want to do it and that type of stuff. So which is can be quite difficult, but yeah.
And then maybe I will, unless you have anything to add, John, I will ask you each for your top prediction for the future of Proptech? What is exciting you most about the future of Proptech?
Do you want to start, John?
Yeah.
You want more time thinking here? Okay. Well, I'm really excited about the potential. It's not easily won, though. I think there will be a major shift when it comes to standardizations and having like predetermined ecosystems, which will make it a lot easier. Sometimes when I talk about this, I say, I mean, it's very good. Now we're in UK, so I can't make that example. But in the rest of Europe, we have the same plugs in the wall, which is super easy when you go. And I mean, nothing says it has to be like that. And if it's not the right plug and you have a machine, I mean, it's super hard to sell if it doesn't fit, does it? And if there were more easily integrations, I think that would be super, super exciting.
More
It feels
integrations.
it's a bit boring things. I might be the only one getting
Very
excited,
practical.
but
I love the
I'm
practical.
looking forward.
That makes a lot of money. I'm sure it's fine. On my side, I'm just phenomenally excited about what we're building with Aichitect and seeing it scale and go into other markets. That's what excites me the most about Proptech. Shameless plug.
For me, with an investment hat on, I think net zero retrofittings is something that I'm like super excited for. Millions of houses in the UK, in Europe today that are like non-compliant and that need to have more energy efficient build outs. And so I've yet to find a winner in the space, and I think it's going to be heavily supported with the various goals that the governments have set on when we want the buildings to be net zero. We're missing a winner in the space, and so that's I'm keeping. So if you do net zero retrofitting, I'm really interested to talk to you.
I think it's 2030 that all new buildings are supposed to be net zero, and 2050
Yes.
It's not
that
happening.
all built buildings
must.
should be net zero. Okay,
Which is a huge opportunity, right? Like it's insane. So
Okay, well, thank you all for sharing your insights. I'm seeing the red flag, so I think we're out of time. Do we have any time for a single question? No, we don't. So please do find our esteemed speakers in the courtyard. You'll be around today and continue the conversation around Proptech, this very exciting space that's going to impact all our lives and already does and will continue to.
thank you very much.
Thank you.
Thanks.